Let me know where you're watching from in the comment section. Okay, if you're joining us, where are you watching from? If you're just joining us, I want to know where you're watching from, where you're joining us from, because today we'll be taking a live trading session, looking through and applying everything we've learned from the beginning of the workshop up till this very moment. All right, up to this very moment. I remember when we started the workshop, we had sessions around understanding chart patterns, understanding what Forex is, understanding candlesticks, and today we'll be looking at some practical implementation of those things that we have learned. So yes, I want to know where you are watching from. I can see Zoto says from Port Harcourt. Thank you very much for joining us. I think I've seen you. You've been following up on the workshop for a while. So today I'll be taking some Forex basic lessons and live trading session, and also summary of everything we've taught in our Octa workshop. All right, my name remains Tunmise Olaoluwa. And yes, so this session is strictly for educational purpose only, and every information shared is not an investment recommendation. It's rather an educative purpose only. One interesting thing that we've had, this has been ongoing since the beginning of this workshop, and it's yet still ongoing at the moment, which is the opportunity for you to get 100% deposit bonus on every of your deposits. So if you deposit $1,000, you get $2,000. If you deposit $3,000, you get $6,000. If you deposit $10,000, you get $20,000. If you deposit $100K, you get $200K. So yeah, it's an opportunity for you to deposit and get double your deposit. Also, another opportunity that comes with this workshop is we give you certificate of attendance to all participants that attended all our sessions. All right, and this is also very interesting and a big opportunity. And lastly, we'll be giving out traders guide, a PDF that would help you to get started trading and also help you to have more insight into the world of trading. All right, thank you very much for joining us since the beginning of this workshop and up to this moment. Today is the last day of the workshop, and we are taking a deep dive into practical sessions. All right, about me, I'm a professional Forex trader with 7 years experience in the Forex trading space. I'm an independent trader and trainer, and also I'm a trader with a focus on price action, and so I provide signals based on price actions only. So there are interesting steps that we'll be looking at in trading. There are steps you have to consider when going into trading, or even before trading. All right. Number one of it is getting to understand the market structure. This is very, very important. Understanding the market structure, from a point of view of demand and supply, can help you channel your energy, or your foresight into the right direction. You want to understand where the market is going or where the market is coming from. All right, that is what it means to understand market structure. All right, and also another step is looking into the key levels. All right, what key level is the market currently? Okay, thank you very much, Joel, for joining us from Cape Town. You're welcome. So you want to look at the key levels. When we talk about key levels, we are talking about support and resistance. Okay, yeah, because the levels of support and resistance is very, very significant. Is very significant in trades. So the levels of support is telling us that It's called, I would call the level of support a buy zone, all right, a demand zone. It is the level where, you know, buyers are waiting to buy a token below its current market price. All right, and the resistance level is called the supply zone. Okay, it is a zone where sellers are willing to sell off their holdings or their position of any currency. All right, so we will be exploring that in this our session today. Entry points. It's very important that it is not enough to just be able to identify market structure or to be able to identify key levels. It's still a question of where do I enter from? Where do I come in from? That's key entry. That's where key entry comes in. All right. So also exit points. So the moment you are figuring out your entry level, you also need to figure out your exit level. So that's what we call the entry and the exit strategy. You need to know before entering a trade how to get out of that same trade, because you don't want to enter a trade and get being trapped in it. All right. So imagine a trade whereby you pick the trade and you didn't bother to set stop loss, and the market keeps going in the opposite direction, and here you are, you're saying, it will go back. The market will go back. Okay, and the market did not go back and it just keeps dropping. All right, so it's not a good risk management techniques. It won't help you to be profitable if you are only able to identify entry levels without identifying your exit levels. All right, and lastly, we will be looking at risk management tips. All right, this is very important because what makes you a professional trader is not even how skilled you are. It's not even if you are using the best strategy on earth. All right, it's a huge your success as a trader falls largely on your risk management. So, and these are the things that we would be talking and touching today. Thank you very much for joining us, Samuel from Kenya. You've been following us. I'm familiar with that name. Thank you very much for joining us. All right, so prior to what I explained earlier in the steps to trading, we had several steps, like 5 steps. We talked about understanding the market structure. We talked about key levels, identifying key levels, entry points, exit points, and risk management. So here we'll be looking into understanding the market structure. And like I said, market structure will help you to be able to define the current market condition. Defining the current market condition is what you need to spot buy and sell opportunities in the market. All right. So when you are able to figure out, what the current market condition is, it then helps you to see buying and selling opportunities as well. Okay. Now, when we talk about this understanding market structure as a step, okay, market structure as a step, you have to identify certain market structure in order for you to spot these opportunities we are talking about. Okay, so one of those market structure you need to identify is the chart pattern. All right, so in our last sessions, in our last workshop, we talked about chart patterns, where we took a deep dive understanding the symmetric triangle, the asymmetric triangle, or the reversal chart pattern, and the continuation trend. In the case of which we looked at ascending triangle, we looked at descending triangle, we looked at double top, we looked at double bottom, we looked at head and shoulder. We also looked at inverse head and shoulder. All right. So you need to, in order for you to identify the market structure, you need to look out for the chart pattern. All right, having to spot chart patterns gives you a step ahead, all right, into spotting opportunity, because the moment you are able to draw out a pattern that you are seeing in the market, and then you're able to spot a double top, all right, having to spot a double top shows that what there is a reversal. That's a reversal pattern. All right, it's a reversal pattern in the sense that markets will be going in the direction at which the price turned towards. All right, so if we are having a double top, we know that market is coming down. If we are having a double bottom, we know that market is going up. All right, so understanding this chart pattern would help you to identify the market structure. Another one, in identifying market structure, you also need to leverage on trends. All right, trends by using trends like the horizontal and the vertical trends. Okay, using the horizontal and the vertical trends, don't worry, we would go into practical session, so I want to explain so that we can understand here. So you using these vertical trends to map out levels of support and resistance. All right, then also you have elements of fundamental analysis. In our last workshop, we went through several economic calendar platforms, like the OctaFX economic calendar, like the Forex factory. Okay, and those are quite helpful. All right, so here is it. Let's go and check out what we've talked about. Okay, we're talking about identifying market structure. We are talking about chart patterns, trends. So here is what we're going to look at now. So in this condition here now, we are asking ourselves, what is the current structure? Okay, so we said the use of trends. So these are trends, right? The horizontal line, the vertical line, that's the trend line. Then we have the vertical line, the horizontal line, and the trend line. So here you can use the trend line to map out levels. So let's use this horizontal line to map out levels here, as you can see. Then we use this trend line to draw trends. Okay, so you can see what is happening here. Okay, then we use this to draw trend. So it helps us to identify what is actually going on in the market. Okay, so because if you look at this very clearly now, it looks like we are seeing a double top here. A double top in the sense that, let me see if we can okay, let me get this. Okay, we are seeing a double top here. This is a top, and another top. Okay, so this is a double top. When we spot a double top as a chart pattern, what's that telling us? That's telling us that what, price would continue falling. That's what a double top signals. All right, it's a reversal pattern. Okay, so we might say, okay, price would continue falling from here. All right, so these are practical ways for us to be able to use chart pattern, trend lines or trends in order for us to identify the market structure. All right. So the next step in identifying market structure, okay, is key levels. All right. Like I said, key levels. What you will use in identifying key levels are trend lines. Okay, because key levels you would help you to spot Trend lines will help you to spot levels of support and resistance. Okay, Fibonacci would also help you to do that. Moving average would also help you to do that. All right, so if you want to spot key levels, you leverage on trend lines. Okay, and you also leverage on support and resistance. So let's look at that. So this is it. When you so you look at this now. Okay, this level here is a support level. Can you see it? I'm sorry, it's a resistance level, because price goes up here and it's being pushed back. Price comes up here and it's being pushed back. All right, so this level on its own is a what? It's a resistance level. All right, so that level is a resistance level. Then if we also want to draw support, if you look at this place here, price comes here and goes back up. Price came here and go back up. That's that this level is what? It's a support level. All right, so you can see how we have been able to use trend lines and also lines to be able to identify key levels of support and resistance. All right, thank you for joining us, John from Abuja and Ashik from India. You're welcome. You're welcome. So, for those who are interested in using indicators, you can then leverage on the indicators that are available here. So Fibonacci, we have Fibonacci retracement, time zones, and the like. So let's use Fibonacci retracement on this current level. All right, so here we go. Okay, sorry. I need to, okay, okay. So with this now, we can use this Fibonacci retracement level to map out levels where price would most likely retrace when price gets there. All right, so the Fibonacci tool now helps us to map out levels of support and resistance, levels at which if price gets to, there will most likely be a retracement. Okay, so and that is what that is what it's used for. All right, so here we've been able to look at tools we can use to spot key levels of support and resistance. So let's dive deeper into the workshop. So here comes entry point. It is, like I said, it is one thing to have spotted your buying or selling opportunity. It's another thing to be able to define your entry level. All right, how do you intend to enter? Okay, so there are two ways we'll be looking at here. You can enter by using indicator signals, and you can also enter by using candlestick confirmations. All right, candlestick confirmation can help you to be able to confirm if you should enter a trade or not. Now, if you look at it, you can also use indicator to confirm your trade. So for those who use indicator, you can leverage on moving average. All right, moving average, and other tools and other indicators. All right, so my interest lies in candlestick confirmation, and I'm going to show you in our next practical session now. So we're looking at how do you enter. That's one of the key things. How do you spot entry points? Okay, and the next one is how do you exit. So because you need to know that like I said earlier, it's one thing to get into the market, another thing to know when to pull out. All right, and sometimes some newbie traders, and even some quite experienced traders who fail to put in some measures, tend to leave money on the table or tend to lose even while they've gained earlier. So this is what I'm saying. So a trader who opens a trade and buys a particular currency without using stop loss or take profit, then the market moves in his direction and he is making profit already, and then he opens his trade and sees that he's making profit, says, oh wow, I'm making profit, and leaves it and said, okay, it's still going to go up, and the market then reverses back into his entry level and goes against him again. Now his profit is gone. He's now in loss even without a stop loss. Now nothing would have stopped you as a trader to enter a trade, okay, set your stop loss. When the trade enters and cross your entry level, in your predicted direction, you move your stop loss closer. When it goes far away from your entry level, you move your stop loss above your entry level, so that even when the price comes against you, you break even and you have nothing to lose. All right, and that is why it is important for you as traders not to be negligent about the use of stop loss and take profit. All right, because this helps you in your entry strategy and your exit strategy. Let's have some practicals. So imagine we have looked into this trade now. Okay, we've spotted a double top, and our interest lies in shorting this market. All right, from this level. Okay, now we then intend to short the market from this entry level. Okay, now what would be our confirmation? So for me, I will come to the 4 hours time frame. Okay, I want to see what is going on the 4 hours time frame. Now, is it a confirmation for me to short or a confirmation for me to buy? I look at the last candle and how it closed. So obviously here now, this candle closed above, the support level. It broke into the support level and closed above the support level. All right. So that is telling me that this price movement can keep going up. Okay, can keep going up. So here is the thing. I then get to enter this market. Why? Based on this confirmation that I have gotten. All right. So based on this confirmation that I have gotten, I will then enter this market. So when I now have that confirmation to enter this market, because of this confirmation that okay, I am buying this market, given that the candlestick broke into the resistance zone and closed above it. All right. Now, if I am buying into this market, where would be my exit and strategy? Since I've figured out my entry point here, all right, based on the candlestick confirmation, where would be my exit strategy? My take profit, should it go in my favor, and my stop loss level, should it go against me? So then I come and put it here and say, okay, let me put my stop loss level below my entry level here, not far away from my entry level. All right, at 1.07332. Okay, and then I put my take profit level here at the next resistance zone, because here has acted as support before this breakout happened, and a resistance has been created. Okay, so this resistance has been created now. This resistance zone now becomes my take profit level. That is the 1.0964 has become my exit my take profit level, and my stop loss level is now 1.073. All right, now I've been able to figure out my entry point based on the candlestick confirmation and my exit levels. All right, so being able to figure it out, I can then take my trade and set my stop loss and my take profit level. If that is clear, please let me know in the comment section. If what I've explained now is clear with regards to entry level, exit level, stop loss and resistance, let me know in the comment section. If you are following, let me know in the comment section. Thank you very much for joining us, God's Time from Lagos. Thank you, Nazari, for joining us from India. Thank you for joining us. So let me know in the comment section what I've explained now, if you understand it. Entry point, exit point, stop loss, and take profit. One important thing that you should note as a trader is profit not taking is not yours. All right. If you don't take profit, you've not made profit. If you don't take profit, you can't make profit. So it is only when you take profit that you make profit. So a profit not taken is not yours. The market can take it back. Yeah, thank you very much, Samuel, for following. Awesome. Good. If you have any question, please drop it in the comment section as well as we proceed. All right, we are at a point that is very critical to this workshop, and that is the risk management. All right, now at this point, it's important for you to know that risk management, it's not just an ambiguous statement. All right, risk management, it is what it is. Now, and when I say it is what it is, I'm saying that it helps you to identify levels of it helps to mitigate against uncertainty. Let me put it that way. It helps you to mitigate against uncertainty. The important thing that we need to know as traders is that there is no 100% certainty. All right. Now, the market is a game of probability. All right. However, it now depends on what level of probability are you leveraging on. Okay, are your strategies high probability trading strategies whereby you are able to mitigate against risks with the aim of maximizing your wins? All right, that is where risk management comes in, and it's only proper risk management that can create a sustainable, profitable trader. And I know that is what you aspire to be. All right, and that is why risk management should be one of your core focus. All right, at this point, at this workshop. Okay, good. Someone said how to handle floating spread. It makes stop loss eat before market actually reach the stop loss. So yeah, like setting stop loss would now be discretionary. You can set your stop loss at places you want to. Also, the way I set my stop loss is I use the next resistance and support level to set my stop loss and my take profit level. So what I do is I set my stop loss at the closest support or resistance level depending on the position I'm taking, and I set my take profit like the second support or resistance level depending on if I'm buying or selling the market, with the goal of being able to make twice as much as I am willing to risk. All right, good. Now, why should you use proper risk management? It helps you to minimize your losses and also keeps you longer in the market. Now, the thing is this. Take this from me. I want you to write this down in the comment section. All right, I want you to write this down in the comment section. Okay, right. It is not about how much you make. in trading. It is not about how much you make in trading. It is about how long you last in business. Drop it in the comment section. It is not about how much you make in trading. It is about how long you last in business. Trading is a business and we should treat it as such. All right, you cannot open a grocery store or you cannot open a business and then start engaging in more risky activity or selling inflammable items and then playing with fire around it. All right, so same applies to forex. It's a business. It's not something that you want to say, okay, let me make overnight profit. So you have to apply risk management. I'm here to see the comment. It is not about how much you make in trading. It is about how long you last in business. It is about you lasting longer in the market, all right, and being able to grow and compound your profit. Yes, thank you very much, Samuel. You are following. He said it is not about how much you make in trading. It is about how long you last in the market. Yes, it's about how long you last in the market. Very important. Yeah, thank you very much, Anne. Anne said it is not about how much you make in trading, but how long you last in the business. Exactly. So let's talk about certain risk management tips that you need to know. Number one is get an adequate knowledge of the forex market and its risk before trading. And that is why OctaFX has actually brought you this opportunity to learn from the best of traders all over the world. It's important that you know that education, okay, keeps you at an advantage. Okay, education, understanding the forex market, understanding how the financial game works, keeps you at the edge of profit, makes you more safe, makes you more profitable, because knowledge is actually the currency. So get an adequate knowledge. And I know that a lot of you here, you are here to get knowledge, so kudos to yourself. Number two, risk management tip is backtest every of your new strategies in your demo account before applying them to your live account. So if you develop, maybe after this workshop, you've developed a strategy and you feel, yes, you want to put it to work. The first thing you need to do is to backtest your strategy. All right, backtest your strategy with a demo account before using your real account. Because if you don't backtest your strategy, if you use your real account to test your strategy, you might be losing. All right, you might be losing. Number three is understand the impact of leverage. If you use a very big leverage, it will definitely impact your trade. If it will impact the level at which your account might might blow up. All right, so if you are using a very big leverage, your account might blow up, and it might blow up your entire account in the case where you lose some funds. All right, so you need to understand the impact of leverage. Okay. Number four, work on your risk appetite. Okay. Now, it's important that you work on your risk appetite. What do I mean? Kill the thoughts of making, twice your capital in one day. All right. Those are possible in the long run when you now have a skin in the game. But right now, when you are still building capacity, okay, it is not advisable that you go all in and risk it all on trading. All right, work on your risk appetite. Don't say, oh, my style of trading is I don't use stop loss. No, always use stop loss. Don't say, oh, my style of trading, once I just see this, I just pick it, no concrete reason. No, that is wrong. All right, always work on your risk appetite. Very, very important. Okay, then number 5, use a moderate position size. When you are using a lot size, we've explained lot size multiple times during the last workshops. All right, use a moderate position size. Don't use 0.1 on a $1,000 account, on a $500 account. That's highly risky. Okay, set your preferred stop loss and take profit level on your trade. We've talked about that, so that we don't want to overflog the point, but it's very important that you as a trader set a preferred stop loss and take profit on your trades. All right, stop loss is important, take profit is important, because if you don't set any of these, you would always regret not taking actions, not exiting a trade, not setting take profit at some point or the other. Number 7 is choose a moderate risk to reward ratio. So you are entering a trade, you are asking yourself, what are you willing to risk for how much you are willing to make? So it's advisable you use your risk to reward ratio can be like 1:2, which means you are risking 50% to gain 100%. That's still wise enough than when you are risking 100% to gain 50%. It makes no sense. Okay, so set your preferred choose your moderate risk to reward ratio. Number 8, use a trailing stop on your trades to protect your profit. Trailing stops helps you to hedge against market fluctuation. So you pick a trade, you set your stop loss, your take profit, and your trailing stop, right? And it goes in your direction. If the higher the market goes, your trailing stop would move higher, so that when the market turns against you, it's either you break even, you make a little profit, or you lose lesser than you should have lost if you were not in the market. So a trailing stop helps you to hedge and minimize your risk, and also protects your profit. Okay, control your emotions. Don't overtrade or revenge. A trader puts in $1,000 into his account and then sit before the screen all day, start picking trade from 10 different pairs, saying, oh, at least one will go in the right direction and blah blah blah. Before his eyes, everything hits the stop loss. He said no, he goes back again, he double his position size. He wants to make back his previous trade and make additional profit. But guess what? The market turns out against him again. So the rule of the game is this: you cannot beat the market. Okay? You cannot revenge and win the market. So don't overtrade, don't revenge. It's not an option. All right? It's not an option. Another important thing is this: know when to stop after consecutive win. I remember some time when I started trading in 2017. Once I opened a trade at a time and I have like 3 consecutive wins, the over-excitement makes me to go back into that trade, double my lot size, and enter again. And guess what? Both the profits I have made and my capital will get wiped out on just a single move when the news blows up. So when you have consecutive wins, 1, 2, 3, just take a break. Let it be the following day. You don't have to be trading all day. So you are all those things. You have to control it. They are all emotions. Okay, when you are overly excited, you blow up things, you destroy things, you lose money. Lastly, never risk more than you can afford to lose. Never risk more than you can afford to lose. So if you are trading, you should look at not risking more than 2% of your account. 2% of your account. And aside that, you also want to reduce your trades. All right? You don't want to have 5 trades running. You don't want to have 6, 10 trades running. No. 1, 2 trades is enough. All right. So these are important tips that of risk management that you need to consider. From what we've emphasized so much on risk to reward ratio, we've emphasized so much on stop loss and take profit. So here is something. Imagine when you are trading, okay? You look at this kind of market. You are setting. So here is the thing now. I want to pick a trade here, right? So I guess my entry level is here. Okay. So I want to make 200 pips away. I don't know. Let me. Okay. So I want to set my profit take profit level 200 pips away from my entry point. Okay. So you see a minute. So you come here and you see how price would move. Okay. From here, you want to set your take profit level 200 pips away from this entry level. So the current entry level is 1.07827. All right. So and if you want to get like 200 pips at that level, that means you'll be looking at, let me use this. You'll be looking at where is it? Okay, I'm coming. Yeah, you'll be looking at so let's say you want to say, okay, let's do 500 to, let's do 500. Okay. So we'll be looking at 0.3 1.08327. Okay, yeah, around here. All right, around here would be our take profit level. Okay, and then our stop loss can now be somewhere here. Okay, so if price moves from here to this place, now that's 200. All right, if price moves from here to this place, now that's like 50, 70 to 100 pips away from the entry level. All right, and here we have 500 pips away. Okay, if we move it a bit lower, you can have like 250 pips away. All right, that's like half of our entry level. So that's like saying 50%, 50 pips, 50% risk, 100% reward. So that's 1:2. Okay, your risk management. So you don't want to risk too much. You can also look at using your net support and resistance level. So if I enter this trade here now, my next support level here, all right, would be my stop loss, and my next resistance zone would be my take profit. That is how I set my take profit and my stop loss. All right, so and this would help a lot. Okay, and also, like I said, to reiterate it, look to taking one trade. All right, one trade, two trade with a very small lot size if you are just beginning. All right, if you are just beginning. All right, good. Yes, so for our previous promo that we mentioned in the beginning of this webinar, here is the promo code. This promo code is my personal promo code. You should use it, and it only lasts until 15th of June. All right, when you use this promo code, you are able to double your deposit. So if you are putting in $100, you get 200. If you are putting in $1,000, you get $2,000. If you are putting in $10,000, you get $20,000. This promo code gives you access to double your deposit. All right, don't sleep on this. This is an important opportunity. Double your deposit and be able to trade so that you will have more volume to withstand pullbacks, drawdowns, and the likes like that. You can only use it once. The promo code is TUNMISEWS. All right, it's an opportunity for you that you should use this promo code to double your deposit. If you have any question for me, drop it in the comment section. Let me know your question, and I would answer them as fit, within the jurisdiction of this conversation. All right. Thank you very much, guys, for following. I can see Wisham. I can see God's Time. I can see Samuel. Thank you. All right, you guys are following. Awesome. So this is a question and answer time. All right. So if you have any question, do well to ask. We've talked about risk management. We've talked about exit and entry levels. We've talked about stop loss and resistance zone. We've talked about market structure. This is an opportunity for you to access. Okay, how do I use the promo code? Yes, you use it when you want to make your deposit. I think our team would get back to you in the comment section now, so that you get to know the steps on how to use the promo code. For those who did not catch up with the promo code earlier, this is the promo code TUNMISEWS. This code expires or ends on the 15th of June. You have the opportunity now to double your deposit. If you have any question, please drop it in the comment section. If you got value from this session, let me know in the comment section. I got value. If you want more of this, let us know in the comment section. Don't forget, in the tips of risk management, number one is education, and you are getting it here. So if you got value from this session, drop it in the comment section. I want to hear you out. I want to know you're getting value from this session. All right, I'm waiting for you guys. I'm waiting. If you got value from this session, drop it in the comment section. If you have any question, drop it in the comment section. If you got value, drop it in the comment section. This is very, very important. If you got value, drop it in the comment section. Let us know that you got value from this session. If you want more of this, let us know in the comment section as well. Yes, so the promo code is for new deposits, and that is a one-time promo code. You can only use it once. So if you've used it before, it won't work again. So you have just one time opportunity to use the promo code to double your deposit. All right, thank you very much. Annie Udo said value gotten. Thank you. Thank you, thank you, thank you, thank you, thank you. I'm glad you got value. Yeah, it's Zoto said I got value. Awesome, 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 awesome. Ghost time Monday, I got value. Thank you, thank you. Awesome. So here is it. This session was brought to you by OctaFX. It's important for you to click on the notification bell. Click on the subscribe button. Tap on the notification bell because this session and other sessions will be holding on this channel, and you don't want to miss out from this. You don't want to miss out from this. All right. Okay. Thank you very much. Thank you very much. Thank you very much. All right. So yeah, in the absence of no question, we'd like to bring this workshop to a close today, and do well to stay tuned for announcements and several sessions coming up so that you will stay up to date on all our academic and educative session. Thank you very much, guys. Thanks for joining us today.